If you back out food and you back out energy year-on-year basis, coming in bang in line with estimates at 2.3%. On a month-on-month basis, though, the increase was a little bit weaker, just coming in just 0.1%, backing out food, backing out energy, and including that, it's just up by about 0.2%. So it feels like a muted number as we go, Romaine, but nothing to then break that story of inflation hanging out.
Yeah, I mean, and look, I mean, when you break it down, I mean, there were some interesting data in there on the shelter costs and elsewhere. But again, this has kind of been the same story that we've seen month after month. It doesn't really, certainly doesn't move the needle much for investors. And I'm not sure how much is going to move the needle for the Fed.
Let's ask. We have Bloomberg, Michael McKee, Bloomberg National Economics and Policy Correspondent. Also with us, David Bahnsen of the Bahnsen Group and Tony Shear of Smead Capital. Mike?
It looks like a sort of decent report in terms of what the Fed wants. Inflation moving up, not too far. The headline number comes down 1/10 on a year-over-year basis. Generally broad price gains, but muted. The housing numbers only up 0.1%. The OER for residences, which is basically what is the proxy for housing costs, only up 0.2%. That slowed over the last 3 months. So it shows maybe house prices getting a little tamer. Food prices only up 0.2. Apparel prices, the big mover, along with, it's always Alex's fault, energy.
No, I didn't.
Apparel prices up 0.4, but they were down significantly going into the holiday season. So a lot of discounting there. So no real signs of inflation pressures. Now, what I wanted to show you is a chart that is really what the Fed is going to be looking at. You take a look at what's been happening with the CPI, and I'm using the headline number because the Fed uses the headline number. They use headline PCE, which runs about 4 or 5 basis points below the CPI. And it's been rising. It's over 2% now. But look at inflation expectations in the market. That's what the Fed is looking at. If that starts to really move up, then they will feel like they're getting somewhere. If it starts to fall, then they get worried. Right now, sort of in the middle, not where they want it to be, but at least not falling anymore.